morning or afternoon, depending on where you're tuning in from. I'm going to give people just a few seconds to jump in and then we'll get started. So I'm Chris Field. I am the Managing Director of Innovation here at Holistiplan. I was the former Chief Growth Officer and very excited to be back in a role where I get to have conversations like this, helping advisors think about growth, helping firms think about what they're going to do in the new year or in this year to be able to maximize the impact that they have on their communities and the families that they work with. So let's start with a poll just so I can get an idea of where folks are with their current tax planning. So it's just a simple poll. About what percentage of your clients roughly would you say you're currently doing tax planning for? So we have pretty much every range here just to get an idea of where you guys are landing, and that's going to help me with sort of some of the depth that we do here. Okay, this is great. Looks like a little more than half of you have answered. If everybody can answer, that would be hugely valuable just so I can make sure we're aligned. All right, so 70% of you, 75 have answered. Okay, this is great. We have a range. It's definitely a spectrum of answers, but it does look like we're a little heavily weighted towards not having done as much tax planning, and we can work with that. That's awesome. So, okay, thank you guys. All right, I am going to share my screen, and we are going to jump right in and start doing exactly what you came here for. So again, I saw several more of you jumped in after I introduced myself. I'm Chris Field. I am the Managing Director of Innovation here at Holistiplan, and I'm very excited about the opportunity today to talk about how we can use tax returns to grow. That's the gist of what we're going to be talking about today. Now, we have a range of people, as that poll just showed us. We have a range of people with experience. So I'm going to kind of hit everything today. We're going to talk a little bit following up. If you came to the Stephen Jarvis website or the Stephen Jarvis webinar, we're going to follow up on that a little bit and just remind ourselves why this matters. But then we're going to really spend most of the time talking about the how. Really how to take a tax return and turn it into valuable conversations. And what that looks like inside of Holistiplan without getting overwhelmed and knowing that it's something we can do to start not in 3 months or 6 months, but before our clients get this year's tax returns. It's perfect timing. We're at the end of February. Clients are going to start getting their tax returns next month. We want to be able to take those before they shove them in a drawer and forget about them, or an electronic drawer if it's a PDF. We want to be able to take those tax returns and actually turn them into something of legitimate value. So let's do it. I call this hidden in plain sight, because one of the biggest growth opportunities in any practice, especially practices that are not doing tax planning, has been sitting in front of you the entire time, and that is your client's tax return. And today I'm going to show you how we can turn those into a serious growth engine. So why does this get missed? If it's such an easy growth option, if it's this sort of hack or shortcut to being able to have growth, then why are more advisors not doing it? And we've asked that question to a lot of advisors. Here's the answers we typically get. Advisors say, I don't really understand how it's going to add value to my practice. I don't understand how it's going to add revenue to my practice. It feels too technical. This is probably the most common answer we get. It feels too technical. I don't know where to start. I'm kind of overwhelmed with where to begin. Or it feels like someone else's job. Hey, I don't touch taxes. That's the CPA's job. And of course, today we're going to walk through and talk about CPAs have a super important role, but it's usually not forward-looking tax planning. So let's talk about that. But because of those three reasons, pretty much as a consistent three answers, a lot of advisors are not taking advantage of this opportunity. So let's remember, explaining to a client how their decisions may affect taxes is not the same as telling a client what tax action to take. And Stephen Jarvis did a fantastic job of talking about this. So I'm not going to belabor it, but I do want to be clear that this session today is going to stay firmly on the first side of that line where we're talking about how their decisions are affecting taxes. We're not telling them exactly what tax action to take. And it's that distinction that has allowed us to serve almost all of the largest RIAs in America and the majority of the top broker dealers, and have been approved by those broker dealers for their advisors to use this. And they wouldn't let us do this if they were concerned, I should say, about this being compliant. So we feel good about that, and you should too. Okay, so what is this and what isn't it? This is not going to be about tax advice. This is not filing guidance. This is not replacing the client's CPA. It's complementing it, if anything. This is understanding the tax impact of the investment decisions so that avoidable issues don't get created. And it's valuable conversations with your client about something they're already thinking about and talking about with others all the time. And this point is so important because when we don't address a topic with our clients, when we don't get out proactively and educate them and have conversations with them about the things they're seeing and hearing on the news and the radio and from their friends, we miss an opportunity to educate and to help them feel confident in the reason that they hired us in the first place. So here's the reality. Investment decisions have tax consequences, period. So a lot of advisors say to us, well, I don't do that kind of planning because I'm just managing investments for my client. But those investments have tax consequences. Which accounts we're choosing, how we're rebalancing those investments, what we're doing about capital gains, what we're doing about withdrawals, how we're handling Roth decisions. All of those have tax consequences. The question is not whether they have tax consequences. It's whether or not we are monitoring those consequences as a way to save money for our client and to show them our value. So that's just the truth we have to work with here. But this is also a growth conversation. This isn't just about managing expectations. It's about growing. Clients don't say to you, hey, is there any way you could offer tax planning? Because it's just something I've been looking for and I didn't know if that's something you did. Very few clients are going to have the language to say that. But they are going to care about keeping more of what they earn, avoiding surprises, feeling confident in their decisions. Those are the kind of things they're asking you about without calling it tax planning. They may not have the language, but they absolutely have the concerns. They want to keep more of what they earn. They want to avoid surprises and they want to feel confident in their decision. This is already something your clients are worried about. They want to have clarity and they want to have confidence in the decisions that are being made on their behalf around everything, but especially around taxes. You can give them that clarity and confidence. And when you do, it's a powerful moment. So the tax return is the source of truth. Every single client has to file a tax return every single year. It is the most powerful financial document in their life when it comes to understanding their financial fingerprint year over year. We talk about it as a financial fingerprint because every client's tax return is unique, just like a fingerprint. When a client comes to you and they bring you that tax return, you have the opportunity to see how the client makes money, actually, what they're bringing in, where their taxes are really coming from, because there's a plethora of places that it could be coming from, which decisions are going to impact those taxes the most, and where some mistakes might be costing them real money. When we don't have the ability to review the tax return, we're making decisions with partial information. And when we make decisions with only partial information, it's not helpful. It could be hurtful. Maybe it's not hurtful, but we don't know. We don't know unless we have all of the documentation. If we went to the doctor and the doctor had a concern about us, even if they were just doing a well check, they're going to want to draw blood. They're going to want to run a few tests. They're going to want to make sure that they have the information they need to give us what we need as far as actually telling us what they see. A doctor doesn't make decisions or shouldn't make decisions based on just a few pieces of feedback from us. Okay. So The simplest ask, because a lot of you actually have never gotten a tax return from a client. That's what we've been told. A lot of people say to us, hey, we don't even collect tax returns. How would we even go about doing that? Here's what we say. Many clients choose to share their most recent tax returns with us so we can be more informed about potential tax considerations related to their investment decisions. So if you're not currently collecting tax returns and you want to bring that language into your firm, you're totally welcome to do that. And it's very simple. Obviously, if you have a BD, you should get this approved by them, but this is a very generic, simple ask. Doesn't alarm your client. It just says, hey, I want to make sure we have all the information we need as it relates to the decisions we're making for you. And that single sentence is one that can unlock both massive growth, which we're going to talk about today, and maybe more equally important, at least, it's going to let you have really better and more valuable conversations. So here's what we're going to cover today. We're going to cover the fact that Holistiplan isn't about some complicated process that requires years to understand. It's about using information your client already has in their hands so that you can have clearer, safer, more valuable client conversations. It's about understanding that the opportunity was always there. It was just hidden in plain sight. All right, so everything we do, and I'm going to go into the app in just a minute and show you this. Everything we do starts with one thing. That's a household. When we set up a household and we add a tax return, that's the basic starting point. You don't need a strategy beyond that. You don't need recommendations beyond that. Just the invaluable information that comes from starting a household and adding a tax return. So when you create a household, this is gonna help us organize who we have in the house, who we have in the family, what their accounts are, and of course their tax information is going to be there. So think of it more as context, not planning. So we have this information, we understand more, we know more, we can do better with the more information that we have. When we upload the first return, which I'm going to show you in a minute, the tax return is going to provide us real income data. It's going to show us actual tax exposure, and it's going to give us clear context for the decisions that we make. This isn't really where anything begins to change. This is where we finally can say, wow, I now have a full picture and I have a deeper understanding of where this client is in their life. So when advisors upload this first return and they get that clearer picture, they tell us the conversations with clients get easier, becomes less hypothetical, much more specific. The questions that the client has are much clearer. They're not asking ambiguously about this thing their friend told them that they don't remember the exact word of it, but it was about this. And you're like, I am not exactly sure what you're asking. When you have that tax return and you understand and you have the full breadth of their financial situation, their questions now make a lot more sense, both for them. They can ask more direct questions and you can answer more direct questions because you actually know what they're asking. And what you find is when those conversations become easier and the questions become clearer, your clients feel a lot more confident. It's not because any of your financial advice changed. It's because the information that you were using to be a great financial advisor and to guide your families, it's because that information got better and that's what changed. Okay, so let me jump over into the household. All right, I am in the very, very most basic part of Holistiplan, which is called the household. So when you come into the home screen, this is the home screen, and all I have to do is click households. Okay. I already went ahead and uploaded a tax return here so that we could get it ready for today's webinar. But I want to be really clear about a couple of things. When Holistiplan was founded 7 years ago, the idea was that advisors needed to be doing more tax planning, but they needed to be able to leverage technology to do that. So Kevin and Roger, the founders, they were doing tax planning. They were just doing it manually. They had these big spreadsheets and it was like literally dozens of pages and they were going line by line through the tax return. And they were like, this is crazy. They started talking and they were like, why can't we just teach a machine to do this? So that's what they did. They built a machine to read in the tax return. The fancy term is optical character recognition, which has been around a very long time, but they train the software to be able to read in a 1040. And at this point, the software has read in a million or something 1040, some insane amount. And so when I upload a PDF into Holistiplan, it takes as little as 1 minute to be able to produce the different things that I'm going to show you today. For the purposes of this part, all I'm going to show you is what it looks like to have a household. So right here, if I want to add a household, all I have to enter in is the client's first name, their last name. Those are both required. I can add some other things, but those are the only two pieces of information that's required. I can add a second client here. If they're married filing jointly, or they're married they're filing separately, I can add in, what another client if I want, okay? Or another spouse or partner, whatever I want to do. So there's other things. I can add the state. I can tag it if I want to with various tags that we have available. If I've got multiple people on the team, I can select which advisor it is. There's a lot of options we have. And if we do this birth date, I'm going to call this one out because I'm going to show you in just a minute. On the example I'm going to show you, we did put in that birth date. And here's what that means. I'm going to get these age milestones where it's going to just be these little breadcrumbs that are going to say, hey, Chris, Peter Professor is a year away from early Social Security eligibility. You can discuss in advance the benefits of waiting to take Social Security. Or it's going to give me a flag. Hey, Paul is QCD eligible. So make sure you're having that ongoing discussion as part of your tax planning. Hey, under the Secure Act 2.0, retirement plan participants ages 60 to 63 are eligible for larger catch-up. Starting in 2026, higher income individuals must designate catch-up contributions to employer-sponsored plans as Roth contributions after tax. Think of these as breadcrumbs. All I had to do was enter in my client's age, their date of birth, and Holistiplan is going to give me these little age milestones. And if there aren't any for the client, it's not going to show those, which is great. But if there are some, it's going to show me those. It's just going to serve as another reminder. And these are all going to be tax planning related. So we're going to sort of remind you about those things that matter to your client's income, those things that matter to the way your client thinks about the money that they make and the money that they spend on taxes. Okay. So look, this is setting up a household. First name, last name. If you want to add date of birth, you can. And then all you have to do is have their tax return. You upload their tax return. And when you do that, you get all kinds of crazy stuff that we're about to talk about. You're going to get their tax report. You're going to get scenario analysis. You're going to have the ability to do Roth projections. You're going to be able to do a lot of things depending on your comfortability level that are going to help you drive growth and are going to help your clients have more confidence in the work that you're doing for them every single day. Okay. So let me go back because now we're going to talk about what it looks like once you've uploaded that client tax return into Holistiplan. This is the exciting part for me. Think of everything we just did as the setup for this, okay? We want to be able to take a tax return and we want to be able to turn it into opportunities for deeper conversations and for growth. So if we know we can generate a tax report in minutes, so we don't need to review it manually, we don't need to review hundreds of them to understand what we're looking at. We have a machine, we have a software that can do that for us. It's been around a long time and it's done a lot of these. Then the real value becomes, what am I looking for? And it's not to give advice. I can't be more clear about that, but it's to have better conversations. So we've got the household, we've got the tax return, and now it's going to generate a tax report. So let's see what stands out. I'm going to go through the slides and then we're actually going to go back into Holistiplan and I'm going to show you in a real tax report. So what the tax report is and isn't, it's not a recommendation. It's not a filing guide. And by itself, it's not a strategy. It's going to be a snapshot of how that client's taxes show up in their financial life. And it matters because what your clients don't want is more complexity. They don't want more jargon and they don't want more paperwork. They do want clarity, confidence, and fewer surprises. And this 1 to 2 page report summary is going to give them the exact confidence and clarity they need to start those conversations. So, opportunity number one, we have the chance to demystify the tax return. Most clients don't really understand what they're looking at on their tax return. And what the tax report and the tax explainer are going to help them do is understand what the numbers mean. It's going to show them exactly where their income comes from, and it's going to let them see why certain totals are going to look the way that they do. So let me actually go ahead and show you that in this example, okay? So when I say we're going to demystify the tax return for this client, here's what I mean. I've got some options of ways I can do this. First, I have this tax explainer. This tax explainer is going to walk me step by step through where my income comes from. So you can see in this example, I've got ordinary income, cap gains, and qualified dividends, which gives me my total income. It's even going to break out where the ordinary income comes from, which line, what form. It's going to break out where those cap gains and qualified dividends came from. It's going to talk about my client's adjusted gross income. What's that total income? What are those above the line deductions? So how do I get my AGI? And where does that number come from? It's going to show me my client's taxable income. So I've got my AGI now, but what about my deductions? Okay. And what are my deductions, by the way? Well, here are the deductions that were on your tax return. And if a CPA has done their taxes for them, they might not even understand what any of this is. They may not see how this actually impacts their taxes. They may not really understand why these things matter and why it matters for them to document every gift they give to charity, why it matters for them to keep accurate records on these things. Then we're going to have our total tax. So we had our ordinary income tax. We had the tax that came from our cap gains. And then we had other taxes for our total tax of $34,564. And if they're confused about that, we've got this chart that can show them, here's your ordinary income. And here is the part of your income that's taxed for your capital gains and your qualified income. We also map it out here if they want it written in lines like this instead of visual. Did they have any credits and payments? They did. They had $3,700 in non-refundable credits. And then they had some refundable credits, or in this case, they had payments, which is the payments they made throughout the year that were withheld. And that's going to give us what their total tax was owed at the end of the year, okay? This is called the tax explainer. The goal of the tax explainer is to demystify taxes for your clients to where when they start to think about taxes and they get overwhelmed because it's this 20, 30, 40-page document with all these lines and small print that they can't even read, you can help them understand. Now, here's the truth. We have advisors tell us all the time. We have over 50,000 users in Holistiplan now, over 10,000 firms. We have advisors tell us all the time. They say, you know what? If I'm being honest, I actually use the tax explainer and my own tax return to demystify my own taxes because I didn't totally understand some of these things. And some of these things were actually pretty complicated for me. And so it really helped me get an understanding of where I was. And that let me have better conversations with my clients. Okay. So the other place where you're going to be able to demystify, I'm going to show you the top of the tax report, and then we're going to go deeper in it in just a minute. The other place you're able to demystify is right here in the key figures section of the tax report. I want to say this again because sometimes people miss this. Everything I'm showing you right now was created in less than a minute. It required no manual data entry other than typing in the client's first name and last name, okay? All of the stuff you're seeing was pulled off the tax return and put into the tax explainer, the tax report, the scenario analysis, and some other tools that I'm going to be able to show you. Okay. I want to be super clear about that because sometimes people don't catch that. That's kind of the whole point is how much time it saves. and how you have these great outputs with virtually zero manual data entry. So the other place you can demystify taxes for your client beautifully is right here in these key figures. Think of this as the Cliff's Notes for your client's tax return. This is the white paper summarizing the article. Right here, we've got your client's total income. We've got their AGI. We have the deductions that they took. We have their taxable income. We have their total tax paid, their filing status, what marginal bracket they fall into, which I'm going to talk to you more about that in a minute. The average rate that they paid. So a lot of people confuse marginal, their top marginal bracket, with what their average rate was they paid in taxes, and those two are not the same. We've got their 2025, in this case, safe harbor because it was a 2024 return. We even went ahead and split up what were their qualified and ordinary dividends, what were their short-term and long-term cap gains, did they have any carry forward loss, which they didn't in this case, and what credits did they claim, okay? We're still talking about demystifying the tax return. The vast majority of your clients have never been told any of these pieces of information from their CPA. That's not the way CPAs work. That's not a knock on CPAs. It's just not how they do business. Historically, CPAs are historians, they're archivists, they're taking what's already happened and they're documenting it to make sure it's correctly documented so the client doesn't get in trouble with the IRS. They don't often view their job as looking ahead, which is what we're doing with tax planning. And they don't often view their job as educating the client on how they got from A to Z. The client sends over all their documents. The client gets told how much they owe that year. So just this key figures section, plus the tax explainer, is an amazing way for you to educate and demystify for your clients how taxes really work. So we can go in and we can say, let's take a look at your actual tax breakdown. This much of your taxes came from your ordinary income. This much of your taxes came from your self-employment tax. This much of your taxes came from long-term gains and qualified dividends. We can show them those marginal tax brackets. We can show them where they fall. So this couple's in the 22%. We can show them what those thresholds are to bump them up to the next. This is one of my favorite parts of the tax report. We can show them that they were not taxed at the top bracket for every dollar that they earned, because that's simply not true. We can show them that they were just taxed 10%, this couple, on the first $23,200 that they made. Then they were only taxed 12% on the next $71,100 they made. And then they were taxed that 22% marginal rate for their last $50,281 of income. And that's important because very few of your clients have any idea about what's happening here. They just don't see it. And we can even show them how much ordinary income is left in your current tax bracket. We already calculated that number too. $56,469 before we bump up to that 24% bracket, okay? So I'm going to come back to this because I've just talked about point number one, which is demystifying the tax return, okay? That's what we've been able to do through the tax explainer. That's what we've been able to do through the key figures at the top of the tax report. And that's what we've been able to do by just scrolling down a few inches on the tax report and being able to show them exactly how the IRS views their income. Chris, you might be thinking, that's cool. I do think my clients would enjoy learning that. That's not going to help me make more money. I'm not convinced that's going to help me be a better advisor. So let's talk about the other things you can do in the tax return. We're going to have a lot of context around capital gains. So when we upload a client's tax return and that tax report gets created, that report is going to show us all the capital gains that occurred and where they came from. That means it's going to include which gains came from accounts that are held with you, which also means it's going to include gains that come from accounts not held with you. Okay? There are times when clients don't tell us about all of the accounts they have. You can't do that with the IRS, or you can, but it's a problem. They frown on that heavily, okay? This is going to let us have more informed conversations with our clients about timing, about expectations, and about if they might want to trust us with some of those assets that they're not currently trusting us with, okay? Then the other one, this is a big one. That tax report is going to show us our clients' dividends and interest by showing us their total dividends earned, by showing us their total interest earned, by showing us how those numbers show up across all of their accounts and not just the ones you manage. That's going to uncover for us hidden income, overlooked opportunities, and far better context for us to have future conversations with the client. Okay. So now let's go back into the tax report and let's look at how that actually plays out. Okay. So when we go through the tax report, it's going to have the marginal tax brackets for long-term and qualified dividends, a little chart for their taxable income. I kind of went over all that. It's going to show you their Medicare Part B and D premiums and what those MAGI thresholds are for them to get bumped up to the next premium, which matters because if you don't want to go over those and have them have to pay more premium for just a few dollars, they could end up losing money. We're going to have their Schedule A itemized deduction, like all that's on here. And I want to make sure you see that all that's here. And it's all here with no data entry from you. But this is where I really want to focus right now. And I hope your minds are just going crazy here. I want to focus on the fact that when we upload a client's tax return or when we upload a prospect's tax return, I'm going to talk a lot about that in a few minutes. We have the ability to see the interest on the accounts that they have, the dividends on the accounts that they have, this cap gains and losses, and we're going to be able to get very clear on how that exactly factors in to the work we're doing with the client. So if somebody comes to us and we see that they're making interest or dividends on an account that we don't know they have, that feels like a very valuable piece of information. Would it be nice if we brought that business over into our book? Of course. But even if we never do, even if that money stays wherever it is clearly an important or could be a very important part of their financial plan. In this case, we've got 3 accounts, Bank of America, Ally Bank, and Schwab, that are collecting some sort of interest. And these are significant interest. These are 4-digit interest amounts. And so in this case, we know that even if this client has a high yield savings account that's getting him 3.5%, 4%, they have a substantial amount of cash that's sitting there in those 3 accounts. Do they need that much cash? I don't know, but you know how much cash you think they should have. You know how much cash they have in other places. You know what their cash needs are, what their emergency saving. You know all of their situation. So you can determine if this interest is important or not. There may be other goals that they're not touching, that they haven't even gotten to. Investment goals, paying off debt goals, college savings goals, giving more to charity goals that are being hindered by the fact that they have money sitting in accounts that's not being used the most efficiently. This is a huge opportunity for you to be able to see and get insight into something that's hidden in plain sight that you're not going to be able to see if you don't collect your client's tax return and upload it and be able to see on a tax report exactly what those income sources are. Same story with dividends. I won't belabor the point, but it's very, very similar to interest. We know what clients have with us. And if something shows up here, they're getting dividends that are not with us, we want to have a conversation about that account. How is it invested? How does it impact the other investments we've made for them? If we're trying to have a portfolio that has some balance, where they're getting these dividends from really matters. And this isn't to say the client's hiding things on purpose. We've heard of situations where somebody inherited an account and in their grief And in their just dealing with the loss, they didn't deal with the account. It was the last thing on their minds. And so it kind of just sat out there. And then they moved on and went on with the rest of their life. And they had it and it was there, but they kept meaning to get to it, but they hadn't gotten there yet. That's a huge thing. So I want to be clear. We don't necessarily think anyone's being nefarious here, but we don't know what we don't know. And if a client doesn't share something with us, we don't know. We're beholden to exactly what the client tells us they have. And if they forget something or they don't want to tell us something, that's their prerogative. But we don't want to give financial advice with an incomplete data set. And the tax return is really one of the most powerful and efficient ways for us to get that complete data set. Again, with no manual data entry. So we also are going to have the ability to look at their Schedule D, cap gains and losses. And that matters as well, right? Because we're going to be able to communicate to them what those gains and losses were. And this may trigger some conversations because we know what our cap gains and losses were on the accounts that we were helping the client with. And if we see that those two numbers, what we have documented and what they have here, don't add up, that's a flag. We need to go and figure out where that came from. And maybe they're doing awesome. And that money's exactly where it needs to be. But that'd be a great thing for us to be able to tell the client and for us to be able to have that conversation. Okay. So let's finish up the slideshow and then we're going to do a couple more things inside Holistiplan. Here's what advisors tell us when they're having those conversations with the client around the tax report, around those places that may not show up until they actually have a tax report. It lets the conversation they have with the client feel clearer because it's based on truth, the whole truth, and nothing but the truth. It lets the advisors say that their clients feel more informed because if the advisor has all the information, the client has all the information. It lets advisors feel like the decisions they're helping the clients make and the decisions they're asking the client to make are less reactive because they have the full picture now, and that full picture is actually visible. Okay. So part of what I'm trying to say today, and then we're going to go back into Holistiplan. This is my last slide. The report is not telling you what to do. What it's doing is helping you see what's already happening with far more clarity. Okay. And that clarity is exactly what creates better conversations. And those better conversations are what drive impact and growth, both AUM and through referrals, et cetera, with your clients. Okay. I'm going to show you a little bit more about what happens on the tax report. Then I'm going to show you a couple other things inside Holistiplan. I want to be really clear before I keep going through the tax report. We have advisors of the 50,000 users on the software. We have advisors of every stage and level of, let's say, confidence around tax planning. We have every single day, somebody comes into the software and they tell us, I've never uploaded a tax return before. I've never even collected a tax return. They're able to get into Holistiplan, upload that first return, and start learning from the tax explainer, the tax report, and start having those conversations with clients. We have folks who say, like a lot of you in the first poll, you know, I do have some of these, I am doing some of this, but this is going to take it to a different level. This is going to let me do it for more clients, or this is going to let me go deeper for more clients, or this is going to allow me to actually have some deliverables. I don't have these deliverables right now to guide these conversations with my clients. And then all the way on the far end of the spectrum are what our founder and CEO, Roger Pine, lovingly, affectionately calls the nerds. And Roger says that because he calls himself a tax nerd. And the software is able to do what those advisors need as well. I just want to be clear before I start jumping into some of these other pieces of the software that you don't have to do everything I'm showing you right now. You may start just using the tax report and you may find huge value from that. We have a ton of advisors. They never use anything but the tax report. but I'm going to show you some other things in case you want to see more of the capabilities. But let me show you one of the coolest things about Holistiplan. When you upload the tax return and you get all this, you don't just get all this. You're also going to get what we call observations. And I'm going to scroll to the bottom. There's more stuff in here that I didn't even touch, but I want to show you our observations. So there's a lot of buzz right now about AI and what can happen, being able to take one thing and get information. I just want to be clear, for 7 years, advisors have been able to upload a tax return and receive these observations about how that tax return might affect their clients' taxes. Okay? This isn't new. We've been doing this a long time, and we've been doing it for almost 1 million tax returns. So there's a lot of really valuable things, and we've gotten a lot of valuable feedback from our advisors on which of these observations are the most valuable. So, like, I'll read through a couple of these that are going to populate. This is very specific, by the way. We have over 100 possible observations. The only ones you're going to see on a client tax report are the ones that are relevant for your client. So we're not going to talk about Social Security for a client that's 40. We're not going to talk about qualified charitable distributions for a client that didn't make any charitable distributions the year before. We're not going to talk about mortgage interest for a client that doesn't own a home, okay? Or doesn't have a mortgage. These observations are going to be unique. So how many you get on a given tax report is going to vary. It's going to depend on the client. It's going to depend on that financial fingerprint, which is their tax return, okay? So just let's look at a couple of these just so you can read them and kind of see what I'm talking about. Given that you reported income on Schedule CE and or F, your risk of costly errors is elevated. You may consider working with a tax professional next year. So we didn't see where they paid any professional fees, but we did see where they had Schedule CE and F. And we want to make sure they know, hey, we're starting to move into a little more complicated tax return. We should have a conversation about what it might look like for you to work with a tax professional. Your income is nearing that threshold for NIT. So it's within 10% of that threshold. We want to be mindful of that. And we want to consider some strategies that might help us reduce that taxable income so we don't unnecessarily barely go over that threshold and hit that 3.8% NIT. You are in the 22% marginal bracket. Depending on your age and your income projections, we might consider a Roth conversion. I'm about to show you guys a super cool Roth conversion tool in just a minute, so we'll come back to that. Look, I'm not going to read all these to you. You all can read. I'll give you a second to read some of the other ones that are on here. So I'll actually rest my voice for 5-10 seconds while you guys read these. Okay, and here's what I want you to know about these. If there's one of these observations that you don't want to present to a client, you can hide that observation. You can just click over here and it's going to be able to hide that observation for the client. Okay, so I've hidden those. They're going to show up for me at the bottom, but when I go into report, presenting this to the client view, which is at the very top here, let me show you presentation mode. It's not going to show those that I hid. The other option is we give you the ability to edit these observations. So if there's an observation that is pretty close to how you would deliver the message, but it's a little bit different, you can go in and you can edit it to be more like you would want to say it. Now, some of the broker dealers have this locked down to where you can't make those edits. So you have to see if you have that functionality, but that is a core functionality that comes when somebody gets those observations. Okay. By the way, if you tell us what state your client lives in, we're going to have some state observations around taxes, and you can always add a manual observation if you choose to add something that we didn't populate inside Holistiplan. Okay, so just to show you that presentation mode, it's just going to make things a little prettier. It's going to pull some of the stuff out that is not as much of a deliverable, not as clean. It's going to just make, and we have most of this functionality still here. And then, of course, at the end, it's going to not show you those observations that you didn't want to see because you told us you wanted to hide them. Okay. So that is the tax report. Let me show you a couple other things. And again, please, 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 if you've never done this, just take what I'm about to say as a future opportunity of where you can take this software in the future. Okay. Don't get overwhelmed and say like, I don't know how to do this. That's overwhelming to me. And by the way, we have a ton of training. We have Holistiplan 101 where you can come on and get acclimated and ask questions to our support team. We have an amazing support organization. They literally answer questions all day long. And of course, they can't do your tax planning for you, but they can answer questions that you have. And we have bukus of training. Actually, people have told us sometimes we have so much training, they don't know where to start. And so we'll actually guide you on telling you exactly where you need to start, what trainings are going to be most relevant for you. Coming up in April, we have our tax planning summit. It's our fifth one. It is, we believe, from everything we know, the largest tax planning summit or the largest tax planning gathering in the world. Last year, we had 8,000 people that registered for it. It's free. So we have tons of educational opportunities. Please don't get overwhelmed. But this next bit is going to be for the nerds among us who want to go a little bit deeper into some of these things. So I'm just going to touch on them today. And if you need more, we can get you more. But I just want to show you what's possible, okay? First, we have this amazing Roth projection tool. My friend Andrew set this up for me, jokingly called it, Do You Even Roth? And we're going to be able to take what we might do for a client around their Roth conversion. And he went ahead and set this up. And we're going to be able to look at what the impact of that Roth conversion might be versus a base case. And of course, the more years that Roth conversion is in place, the more likely it is to make sense for the client, depending on their age and their income, right? So we took a client, Peter and Paula Professor, we assumed some inflation, and then we took some of their taxable assets and we took their cost basis, all that stuff, right? And we essentially said, what would it look like if I did a Roth conversion over several years when it comes to all the things that matter on taxes? So we have first the tax bracket visualizer, which is going to show them with and without the Roth conversions, how that's going to look. We have the projected taxes based on, I think we go out 30 years. In this case, it's how many years is that? That's actually more than 30, 36 years. But what are the projected potential taxes, depending on how far it goes out? We have the IRMA surcharges. So we have sort of the base, then we have the Roth projection. So what's the difference going to be in those two when it comes to their Part B and D premiums? And then we have the portfolio value. So we have this base projection, and then we've got the Roth projection. And we can sort of show the client like, hey, depending on how many years that we're talking about here, and then you see the delta, the gap starts to widen here about, let's see, right about year 23. That gap really starts to widen, and then it really opens up as they go further, okay? So this is a conversation we want to have with our client. We're able to talk about the portfolio difference with a Roth conversion, and just to be able to have an honest conversation with them. Here was your base case. Here's the case for a Roth. Not saying you need to do this, but I want you to at least have all of the information. And here's where you're going to be on those RMDs, right? Here's what, if you do a base case, here's the RMDs you're going to be required to take. And if you do a Roth conversion, here are the RMDs you're not going to have to take. Okay. So, and we have some assumptions in there. I'm not going to dig super far into this. We have plenty of training on this. Andrew is amazing and he's done such a great job. This is kind of his baby and it's an amazing tool. Advisors use it every single day. We just want to make sure you know this is the kind of thing we have available to you. The last thing I want to show you, and then I'm going to say a few more words about how to leverage this for growth. The last thing I want to show you is scenario analysis. So we have the ability to take what happened on a tax return, which is what we have in this first column, and it pre-fills all of these blanks based on the tax return, no manual data entry. We have the ability to create a blank scenario where we can then change what is on the tax and we can look at how it would impact our clients' taxes. If their wages change, if their taxable interest changes, their qualified dividend changes, short-term cap gains, long-term, all that, we could change any of those things we want. We could model what a qualified charitable distribution looks like, et cetera, et cetera, et cetera. And when we can get as deep and nuanced as we want on this, again, don't get overwhelmed, please. But when we do that and we get to the bottom, it's going to show us what the tax difference is going to be. And by the way, we could even take a client's current state and show them how, if they lived in a different state, what some of those federal tax implications might be, or what their state tax implications might be, because we do have the ability to have state tax. So if you're in a state with a high tax bracket for the state tax, you have the opportunity to potentially move into a state with a lower tax, state tax, or no state tax at all. Okay. I want to use the last 8 minutes to do this. This is when we built this tool, when Roger and Kevin built this tool, they built this tool for financial advisors who were already doing tax planning for their clients. That was their vision of who would use this tool. And that those people would just be able to do this so much faster, and they'd be able to do it more accurately, and they'd be able to have a deliverable to give their clients. Well, then something happened. So we like to joke around here, like we don't know if we caused the tax planning wave or if we benefited from the tax planning wave, but we just know we've been along for an amazing ride over the last 7 years. And we'd like to think we had a lot to do with this becoming normative. But what we realized was that we had lowered the barrier to entry. So there were a lot of advisors that wanted to be doing something like this and just didn't know where to begin. They were overwhelmed. They didn't want to have to spend 10 years reviewing manual tax returns to be able to have a base of understanding. They didn't want to have to spend years basically becoming experts. We lowered the barrier to entry to where anyone who's willing to take just a little bit of time is going to be able to do some powerful planning when it comes to something that every single one of their clients have and something that every single one of their clients cares about. And then we had another unexpected consequence, a positive one. And that is advisors started telling us they were using this to be able to close more prospects. Advisors told us stories where clients would actually bring in their paperwork to the session where they're seeing if they're a good fit. And they would hand the paperwork over to an admin or a paraplanner. And the advisor would take the clients back to their office and get them drinks and get them comfortable and have some small talk. And by the time they moved into the conversation about what the firm could do for the family, they were already able to pull up the client's tax report on their screen. And the families were saying, nobody else has done this. Nobody else has shown us this. Everyone else talked about large cap, small cap, blended. Nobody else was able to turn around and show us exactly some of the benefits we might be able to have because you're going above and beyond and talking about our taxes and our tax return with us. We have had multiple clients. You can Google and find some Reddit threads that we stumbled upon accidentally where advisors are talking about how this has become their most powerful closing tool. So not only do you have the ability to deepen conversations with your current clients, not only do you have the ability to find hidden assets that you didn't know your clients had. You also have the ability when you're using the tool to be able to close more prospects because they see the differentiator of you doing something that other people simply aren't doing, especially if they've come from an investment management background where they weren't getting anything like this. Okay. I have one last question for you because it helps me and it helps us as we think about how to do a better job on these webinars. And so I want to give a poll. If you're not yet using Holistiplan, if you're not yet using this for tax planning, I'd like to know why that is. Is it that this still feels too complicated, even with the way we broke it down? Is it that you need to get your team on board? You're all in and you're like 100%, I got to do this. I get it. I'm in, but I got to pull my team along. Is it that you don't really see the value? You still, after today, you're like, I don't know, man. Like spending $1,500, $2,000 a year on this, I'm not sure I'm going to be able to make that back with my clients. Like, this is really valuable feedback for us because we feel overwhelmingly confident that we can help you not make this feel complicated. We feel very confident that we can give you whatever resources you need to get your team on board. We've got all the security stuff you could ever want. And we feel very sure that we can help you see the value of this. Okay. So, and I appreciate the ones who said they're signing up. We'll be excited to see your name come through. I want to mention one last thing, and then I'm going to wrap up. I'm going to give you a couple minutes back today, but I forgot to mention this, and I'm so glad. Let me see if I closed my stuff. I did not. Amazing. All right. I'm going to show you one more thing because my colleague Alana was going to kill me if I forgot to show this because she just yesterday reminded me to show you guys this. We have an incredibly cool feature, and that is if you're wanting to collect your clients' tax returns, you actually have the ability inside of Holistiplan to be able to ask them with a custom link to send you their tax return. Okay, so you have the ability to go into that household, and once you're inside this household, you have the ability to send them a secure link that we generate just for you right here inside Holistiplan. You have the ability to send them that secure link and to be able to say, hey, I have a secure link. You can just click into this link, which is in this email, securely upload your tax return, and that tax return is going to come straight into Holistiplan for you. So you're not even going to have to worry about this paper trail, this back and forth. You actually, from inside that screen I just showed you, you can click a button that says that you want to generate the link, and it's going to generate a secure link for you. You email it to your clients. They upload their tax. They click there, upload their tax return. It comes straight into Holistiplan for you. We've tried to make this as simple as possible. We've loved over the last 7 years watching Holistiplan be transformational for advisors. And we are very excited about the possibility of adding you. It's the perfect time for it. Your clients are going to be getting their tax returns. Don't go another year without using this. Don't go another year without letting the moment pass when your clients have questions and they need answers. You can be the one to provide those deeper conversations, more growth by understanding what's there and closing more prospects. I hope to see you guys on some future webinars. Again, Chris Field, Managing Director of Innovation. Really appreciate you guys being here today. Have an amazing rest of the day, amazing rest of the week, and we'll see you on the other side inside Holistiplan. Sign up for your free trial today. Thanks so much. Bye-bye.